And as Donald Trump embarks on this second term as president of the United States, the global markets are clearly bracing for a slew of policy changes that could have far-reaching impact. Increased tariffs on foreign goods to a potential shift in supply chains favoring that China plus one strategy. Of course, all of that is likely to change. The implications for global trade, for economic growth, all of those are vast. The Wall Street in particular, watching closely, Trump's policies could impact both Indian markets and foreign portfolio investments. Just to delve into whether we are likely to see a manic Monday or not in the markets everywhere, will it be business as usual? Let's connect with a distinguished panel of guests joining us tonight. Sunil Subramaniam is a seasoned Indian market expert. Jeff Dennis is also with us. He's our go-to independent emerging markets commentator. And Santosh Rao is head of research and partner at Manhattan Venture Partners, our eminent Wall Street connection. Gentlemen, glad you could join us this Friday on ETNOW and welcome to India tonight. Let me take this across to you first, Sunil Subramaniam. Should Indian equity investors brace for impact at the top of the next week? Or do you think more or less we've priced in already what Trump could do?
I think it's a large deal, it's priced in. And also the markets, as you know, buy on the rumor and sell on the fact. So a lot of the rumor-based buying has happened. And I think the Trump trade that's happened, yes, Trump is also not likely to make announcements immediately on inauguration. So give it a couple of weeks. But I think by and large, the Trump trade that's happened will reverse in the coming weeks. The reason for that is two things. First is Trump on tariffs, right? While the rhetoric and the talk has been very high, implementation of those tariffs would lead to a spike in inflation for US consumers. That's not something Mr. Trump will want. So he'll be more pragmatic about it. He'll use those as a negotiating tool to get down import prices from all the countries. That's number one. Number two is the market has talked up the dollar because they expected American businesses to rebound and Trump to support them through tax cuts and the like. But a strong dollar goes against Make America Great Again. If America has to go down that path, then exports have to be boosted and a strong dollar is not going to help. So my view is that Trump's going to actually try and get a weaker dollar gradually. So which means that the Trump effective trade that's happened, I see that it'll reverse in the weeks. Monday itself as a day, like I said, market has already bought into it. Probably on that day, there'll be a little bit panic, but not something very great. But in the coming weeks, I expect a reversal to mean in terms of both the dollar as well as on the tariff fronts.
You reckon what's the heads up that you'd give investors on Trump's first few policy calls? Is it going to be on tariffs, on China plus one? Any bolt from the blue, because that's what you expect from Trump. What kind of policy statement do you think is going to impact global markets most, negatively or even positively? Santosh Rao, to you.
Oh, okay. Well, I think yesterday the Treasury Secretary, the new Treasury Secretary coming in, I think he was very constructive. I think the market is very comfortable what Trump plans to do. That's why you're seeing the market up today, this morning. Essentially, he's going to be more measured. He has a plan. Yes, the agenda is big. It's very aggressive. A lot of expectations baked in, but he's going to go systematically. The biggest thing going for him, he has the tailwind behind him. The business community is very optimistic. The small business optimism has gone up quite a bit. So I think all those things, and the big businesses, the tech sector has to do well under him. So if regulations go off, so I think he's going to address those issues, kind of moderate things that have gone too far, too aggressively. So he's going to bring it down. So a lot of things baked, a lot of things planned. The agenda is aggressive. So he's going to go systematically, and that's the hope. He's not going to be very belligerent about his policies. He's going to speak properly and make it. He needs it to work. So he's going to be very systematic. He knows that. After the first term, he's going to be where his team is very organized, very well planned. So I think that's what's going to happen. He's going to go slowly, nip away. He has only 2 years, essentially. So he has to move fast on one hand, but he has to be very systematic about it, cut down on the regulations that he has promised. The tariffs he said there are going to be three parts to the tariffs. Yes, where there is unfair trade, he's going to go aggressively. Then he's going to use that as a negotiating tool. And then the third one is he's going to make it more even everywhere. So I think there is a plan out there. It's not as indiscriminate as we think. So I think that's what he's going to do. Address the things right away on the regulatory front, on the tax front, and the foreign policy as well.
Yes, indeed. On all those counts, Jeff Dennis, as far as emerging markets like India are concerned, a lot is going to depend on how the Fed also moves from here. How do you interpret the 25th December, the rate cut that we've seen, the December rate cut that we've seen of 25 basis points by the Fed? How do you see that in context of Trump's re-election? Surely they know what to expect of Trump, right? One would expect the Fed to see what's coming.
The Fed has certainly already admitted that it's started to include potential effects from Donald Trump's second term on monetary policy, and I think there's a very good chance at this point that the best we'll see this year is 2 rate cuts. In fact, we might not see any rate cuts at all. Where I differ a little bit with some of your other speakers is that I actually think that you will see the dollar remaining quite strong because I think the major macro effect long term, apart from good growth in the United States and deregulation, is going to be yet a further rise in the US budget deficit because of the tax cuts, etc. Now, if you combine that with the inflationary effect of the margin of the Trump tariffs, I think the Fed's going to be very, very cautious about moving to cut rates further. And I think you will see higher bond yields once again, as of course you saw for several days until that CPI report the other day. So I think higher bond yields above 5% for 10-year yields, probably the Fed on hold for a while, is going to keep the dollar strong. And I think that's going to make a very, very challenging environment for emerging markets.
Sunil, do you agree? What's your sense of the Federal Reserve under Trump 2.0, especially with that assertion coming through from Jerome Powell that the election results is not going to affect their monetary policy in the near term?
I agree with the view that there may not be any rate cuts this year, because one of the things that people look at is if tariffs in any form come through, inflation is going to spike. So that doesn't give them room for much rate cuts. So I think that 2 at best, and maybe there's a good chance, like he said, that there won't be another rate cut. But at the same time, I differ on the view on the dollar, right? I still think that Trump will, because what's happening is this tariff impact is being taken away by the strengthening of the dollar. Because, the yuan being with any tariff that he puts, to the extent of the depreciation of the yuan, that gives a cushion. So my sense is that I don't see the dollar strengthening from here. That's the difference that I have with. But otherwise, I'm on the rate cut part, I'm with him that it looks unlikely that there'll be a massive series of rate cuts, 2 at best, and may not be any 2.
I'll try and come back to the US dollar, but overall, Santosh Rao, how do you rate the potential for reduced corporate taxes in the US under Trump? If you do see that coming, how is it going to affect FPI flows into India? Is the tapering of investments in Indian equities a given in that case?
Yeah, I think on the taxes, if I got your question right, it's going to be difficult to reduce taxes. I mean, there is we have an issue of federal deficits, and it's climbing up more and more. The bond market is worried about the whole. It's a big concern overall, but I think that he's getting the benefit of doubt, and they're hoping that he will address those issues and not be very indiscriminate. At the least, he's going to extend the tax because that's expected to expire in later this year. So he's going to extend that so that doesn't expire. It won't go back to 28%. It'll stay at 21%. So I think that's a good thing. But bringing it down to 15% is going to be a challenge at this point. But he'll try. We'll see how he does it. They think that there is a revenue offset to the taxes. Let's see how that works. He wants the tariffs to pay for that. So that there are some calculations, some expectations, some kind of stretch ideas out there. But we'll see how that plays out. Overall, and one point on the dollar, I think Trump himself or his team has said that on one hand, they want the dollar to remain the reserve currency of the world. But if it gets too out of hand and it becomes too punishing, used as a sanction tool, it's going to impact the dollar's dominance. So he's going to be very careful about how far and how low it goes. So I think they'll definitely have an eye on that. But a strong dollar is what he wants, but not at the cost of losing a lot of the status as a reserve currency at some point down the road.
Yes.
On impact in the foreign markets, yes, you have to wait and see. At this point, it's all US-centric. All the investment is US-centric. It's the best economy right now. For the risk reward is much better in the US side. So I think money will flow here. But on the Indian side, and you have to wait and see how that flows out.
Yes.
We have to. The US is still the strongest. So I think it'll take a while. Ultimately, India will get its FIIs, but it'll take some time.
It'll take some time to come. That's what you think. I'll come to Jeff about that. But about the US dollar, Sunil, The expectation is, of course, that it will remain strong. But do you see continued weakness in the Indian rupee? It has been declining to its lowest level now against the US dollar, and that has been playing out over Indian equities as well. But do you see that sustain?
So first of all, I would like to differ on the weakening rupee, right? You're only looking at it on a straight line basis. If you calculate on a REER, a real effective exchange rate, right? Indian rupee has strengthened. As of November, RBI's report shows that the REER is about 108. So clearly the rupee has strengthened. That's because other currencies have weakened more. And in fact, post-November to date, also I was looking at the data, 2.3% has been the weakening of the other currencies and the rupee has matched it. So actually on a real weighted effective rate, our rupee hasn't weakened as much as other currencies. So I think the right way to look at it, though, on a it looks like 86, 87 going on to 90 looks like a bad news. But no, if exports are to remain competitive, RBI has to maintain a balance. I think done a great job so far. But in fact, the rupee today relatively is overvalued. So I think that's the important point to take. I know headline numbers going down. See, the difference between the inflation in the US and India, the difference between the borrowing rates in the US is about 2.5 to 3%. And I think the fundamental laws of loop, that is, there is only one price, right? The law of one price determines that Indian rupee has to have a 2.5 to 3% depreciation over the medium term. In short, it could spurt up and down, but guaranteed is the fact that the rupee has to weaken gradually. And today, it has actually not weakened as much as other emerging markets. Right. So I think that's a contrary opinion. I want to put out there to say that please don't think that the rupee has weakened. It is the dollar which has strengthened.
Right, fair enough. Jeff, wanted to come to you because I was looking at an IMF projection and they are raising their global economic growth forecast. And this is largely on the back of stronger US demand. And they've raised their projection for the US in 2025 to 2.7%. Obviously, this is going to have a bearing on equity markets on Wall Street, of course. But how do you think it's going to play out in emerging markets like India?
Well, first of all, can I just say I completely agree with what Sunil's just said about the dollar and the rupee. The rupee is not weak. It's much less weak than other currencies. I think you've got to be very careful about the global economy. I think the Chinese numbers are wrong. It's not growing at 5%, point number one. Point number two, the European economies are very, very weak indeed. So to a certain extent, in terms of the big picture here, the US is the only game in town in terms of growth. And now those growth rates probably get a bit better because of deregulation and potential for lower taxes. My argument this year is that once again, developed markets will outperform emerging markets because, as I say, I think the number one driver of markets this year globally is going to be the US bond market. And I see those yields going higher because of the fiscal deficit, because of the inflation story, to 5 to 5.5% for 10-year yields. That's going to keep the dollar strong, as I've said already. And that's going to tend to keep money in the United States, as far as I'm concerned. So I think what we're going to find is a number of emerging markets still going to be relatively starved of foreign inflows. Now, notwithstanding the challenge for India of the high oil price and the concerns short-term about growth and high valuations, I still think India is one of the best stories in the emerging markets for sure.
Right.
And all we're seeing so far this year is some rotation. So the big loser in Asia last year, which was Korea, is up strongly. And two of the big winners last year, India and China, are down. So you're getting some rotation with also Brazil and Mexico doing well. So once that rotation plays out, I see India being a good market to be in relative to to the emerging market index overall in 2025, notwithstanding the valuations. But I still see emerging markets lagging the US, primarily because of my view on bond yields, on the Fed, and therefore on the dollar.
Fair enough. But of course, Trump is coming in at a time that we're seeing American equities surging after the encouraging Q3 earnings, Santosh Rao. Do you see that trend continuing?
Yeah, I think the earnings, I think that's been a good point that the market is hanging their hat on. The earnings expectations for next year are about 14% year over year growth. I think that's a good thing. And even if they maintain, if the multiple stays at 22 for the S&P 500, let's say, we're still seeing a very flat to slightly up market next year. So the general expectation is that we'll get to at least 5 to 10% increase next. We won't get the 20% that we've had in the last 2 years, but it'll be next 2 years. And the bank reports that just came out, the first one off the gate, they were very optimistic. optimistic. They think market activity is going to pick up, M&A activity is going to pick up, and that's all good for the economy. So that just shows optimism. That shows that the expectation is definitely high, and they expect things to flow down to their balance sheet, to their bottom lines. So net, I think we're starting off the year with good tailwind and entering in with a lot of optimism. Let's see if it flows. Earnings are expected to be good next year, and let's hope the forecasts that come out this in the next few weeks are just kind of guarantee that or reiterate that the next year things are okay.
Yes, so there is optimism. There is a lot of things that are being said that is positive about the American markets, about earnings, etc., about the American economy, and that's in the data as well. But on the other hand, Sunil Subramaniam, Indian corporate earnings, they've entered the slow lane. Higher input costs, waning consumer demand, we are talking about that. What sectors do you believe are best positioned now to weather this downturn, especially now as Trump assumes office?
So I think that one thing that we got to remember from the domestic market, that while FIIs have been consistently selling, the reason the markets have corrected is not the FIIs selling. It's because DIIs, domestic institutions, have not been buying. And I saw an account which said just mutual funds are sitting on $2.5 billion of cash on their books. Now, why is that? And that's why the markets are falling, because when the FIIs are selling, the buying support has been lacking. So the reason the DIIs are not buying is because there's an event-filled heavy calendar now. So there's the earnings season to come through. Then there's the economic survey, which will come a couple of days before the budget. Then there's the union budget. And then there's the RBI policy on the 6th of February. Yes. So the domestic fund managers are waiting for these events to happen before allocating. And they have no choice but to allocate because they can't keep cash for too long. And so from that perspective, if you now look at where domestic funds are likely to put from a thing, I think this time the union budget is going to be a bit more populist than past union budgets, right? So which means that I see the government wanting to boost consumption, because unless mass market consumption, it's been a K-shaped recovery in India because there's a K-shaped income breakup that's happened. Yes. So the K-shaped recovery means that mass products haven't got consumed, and so FMCG and consumer staples have not grown, and hence that's the part of the market which is weak. But the budget, either through tax cuts or through developmental populism, will try to put more money at the bottom of the pyramid. And I see consumption trying to get boosted. And domestic fund managers will like that, because ultimately capacity utilization in the private sector is lagging at around 75, 76 for quite some time. Yes. Unless that shoots past 80, private sector capex won't step in. So I think that a boost to consumption in the budget with the capex coming through by the end of the year means that the sectors to bet on initially are consumption. Yes. And along with that, the BFSI, the banking, financial services, insurance, and the capital market. Fair. I think that's the key segments which will do well, because even through an up and down on the consumption capex cycle, you've seen the flows into insurance and mutual funds be consistent over the last a year or so. Right. So that's
notwithstanding a Trump coming in for a 2.0. That's notwithstanding the Trump impact. But if you are to consider the dynamics of US-India trade in favor, whether or not it is in favor of India or not remains to be seen. But if India turns out to be a net positive gainer, which sectors do you think Santosh Rao could gain? And perhaps I'll take that across to Jeff Dennis as well. Santosh?
Yeah, the sectors in the US is essentially, I think the cyclicals are going to do very well. The financial sector, like I said, because of the renewed activity and the optimism of the business community, I think that's going to do well. Then the infrastructure companies are going to do well, because he's going to invest a lot in the local infrastructure as well. It's onshoring rather is going to be big again. He wants things to be done here. So there's going to be a lot of investments and priority given to infrastructure development. So I think infrastructure stocks are going to do well. I think and material stocks also will do well. So net, I think cyclicals, materials, and also technology will continue to do well, because they has a Trump's backing at this point. So there is less regulatory pushback on that. So these three sectors are my favorites: financials, industrials, and the last part I just mentioned. So I think that those are the areas that will really.
Yes, indeed. We seem to have lost connection for a bit. There is a bit of a glitch coming through, but that point is well taken. Meanwhile, of course, the Indian equity market commands this high valuation premium, and we'll see whether or not that is sustainable, or are we headed for a correction as Trump comes in. It's going to be a crucial time as well. But as we navigate through the implication of Trump's second term, there are opportunities, there are challenges ahead for the global and Indian markets, volatility perhaps on the horizon. So investors must tread cautiously, pay close attention to corporate earnings, valuation metrics as well. Sunil Subramaniam, Jeff Dennis, Santosh Rao, thank you all for your perspectives, for joining us with your analysis and outlook. Staying informed and adaptable, those are going to be key to navigating uncertain waters. We'll take a very quick break on India tonight. On the flip side, of course, we've got a lot of ground to cover, especially earnings. Wipro and Tech Mahindra both have announced their third quarter numbers. How exactly have they fared? My colleague in our Delhi studio, Sumita Karir, joining us on the flip side of the break to walk us through those earnings and much more. Do stay tuned.